As you know, for the non-traders here, there are three charts which I track every quarter because they are the three most important charts in macroeconomics, and they have 100% success rate, 100%. And these are what I call the big charts. And so, first of all, the first chart is the federal funds rate. So this is the US Federal Reserve's setting of interest rates. And as you can see, over the years, it's basically done all sorts of things. But it is cyclical in certain ways, and it is quite predicative of what happens. So when you're first looking at this, it's quite counterintuitive, but just bear with me. So this is taken from the Federal Reserve's website. And the grey areas are economic recession, so stock market crashes, all that sort of stuff. Now, just with looking at this chart, you can see that every single time there's a sharp rise in interest rates, it always leads into an economic crash, okay? But there's a subtlety here which not many people see. And the subtlety is that the crash doesn't happen until rates start dropping, okay? So that's the key thing. So if you see a pausing of rates, for a couple of quarters, the stock market actually, if you superimpose the S&P 500, the stock market actually rallies if there is a pausing of rates. But it's only when rates are cut aggressively, that's when the crash happens. Now, when you think of it, I guess, why that happens, the reason rates get cut very sharpish is because things are breaking in the economy. Circuit breakers are hitting, all hell's going loose, and so the central banks around the world can only do one thing. They're like, oh! You know, they get the clear, and they try and stimulate the economy with lower rates and more printing of or expansion of the currency supply. So, for example, the main pause here is around sort of 2006. There was quite a long plateau. The stock market absolutely rallied, even though the subprime mortgage collapse, that started in 2005, the subprime mortgage debacle. But it was only once they cut rates, that's when things hit the fan. Okay, so that's interest rates. That's the first big chart. Now we're going to superimpose this red stuff over here, which is the unemployment rate. Now this is counterintuitive as well, and these stats are actually a massive lie. The way that the US and the UK calculates unemployment is very bullshitty, if that's even a good adjective. Because if you're unemployed, if you lose your job straight away, you are not counted as unemployed. You're counted as, I think, part-time and looking for work. You're not unemployed. Then if you're still unemployed over, I think it's a 6-month period, you're still not counted as unemployed. And it's been a while since I last looked, but it's only once you're unemployed for a certain period of time, they count you as unemployed. Then if you're like perpetually unemployed, you then go off the list again. So you're only counted as unemployed for a certain period of time, even if you never get a job. And it's a way that the government sort of fluffs up the figures. However, it's irrelevant. If you just take it for what it's worth, there is a trend here, right? Every time the official unemployment rate is rock bottom low, guess what happens? Crash. Economic crash. So here's the red line. Every single time we see a local low in unemployment, guess what happens? Crash. And then unemployment goes really high. We then have a local low in unemployment, there's another crash. And every single time you see a low in unemployment rates, there is an economic crash. Well, guess what? We are literally at the, just before the COVID March crash, we were at a local low, and right now we are at, decadely lows. So this is another indicator showing that there's a huge economic crash inbound. So that's now two big charts all saying the same thing. Rapid rise in rates, so when that starts being cut, game over, and we're at the low for unemployment. Now for the third one, this is inflation. Now again, I could talk for a while about how badly inflation is calculated. It's not the consumer price index, it's not the CPI, I call it the CP lie, because they always take things out of that metaphorical basket. But the green line here is inflation. Every single time we see a hike in inflation, guess what happens? Economic crash. Every single time. And I could also superimpose the oil price, the WTI oil price, and it'll show the same thing. Rising energy prices causes rising inflation and also the expansion of the currency supply. So you now have the three big charts all saying the same thing with 100% accuracy since sort of the early 1900s, really. Rampant inflation, as in real inflation, combined with a local low in inflation, unemployment rates, and rampant increase in interest rates. This is like the perfect storm, all culminating. But things are way worse now because the financial system is so much more vast than it was in 2008. When you look at how banks analyze risk, they are very selective in how they analyze risk. So they look at nominal risk, not gross risk. So let's say you have a seesaw. This is the easiest way I can explain it. And let's say this seesaw is made of metal, some sort of metal, okay? And I was to put a 1-ton block on both sides, okay? Now, if a bank analyst was going, okay, what's the risk of this seesaw? They'll be like, oh, well, the net movement is 0 because there's, we've got equilibrium here. There's 1 ton on each side. There's no risk of any wobbling of this seesaw. But really, so that's the nominal risk. What is the gross sort of weight on this? There's 2 tons on this plank, right? 2 tons. Now, let's just exaggerate things. We now have 1 million tons on this side and 1 million tons on this side. A banker analyst or risk controller will say, yep, notional movement is 0. They all cancel each other out. Everything's fine. But then all of a sudden a black swan event comes along and it breaks the seesaw and everyone goes, oh, we didn't see that coming. Well, if a normal person like you and I would see, well, wait a minute. A metal plank can only withstand so much weight. So actually, what is the real risk here? 2 million tons of weight all on a fulcrum right in the middle. That is the weak point here. So at some point, there's going to be a snapping of the seesaw, even though the nominal risk was counterbalanced. So, and that's how the world's derivative market works. And this is why I've been so bearish on Deutsche Bank. I mean, for anyone that's known me for a long time, I've been slamming Deutsche Bank for best part of 8 to 10 years. They are the biggest spider web of financial derivatives on the planet. There's no other bank that has more derivative influence than Deutsche Bank, and they are going to 0. And if you look at the share price, it's just been like a black ski slope. So, next slide. This is the US 10-year Treasury rate. Now, this is where things can get a bit confusing, and I'm not going to go into this too much, but long story short, the way that the US government and any government works is that no government on the planet runs a balanced budget, okay? So we're normal people, right? We, hopefully, are running a balanced budget. Let's say you have a job and you've got £2,000 a month coming in and your outgoings are 1,500 quid a month. You've got a £500 surplus per month. Yeah, makes sense? And so you are living within that £500 a month surplus. But a bank, any government department, any government full stop, no, they don't do that. If it was the equivalent, they would be earning £2,000 a month, just like we do, and their outgoings would be 10 grand a month, and they'd be running like an 8 grand a month deficit if it was a country. And so what happens is you have a bond market. And whenever you hear the word bond, you have to replace that in your head with 3 letters, IOU. So they go, oh, we need to buy more, Medicare and stuff. We need to build a bridge. We need to whatever. We need to go to war. They don't have the money to do that. So what they do is they go to the open market and borrow money. And they do that via bonds. They're like, hey, here's a 10-year Treasury note here. So this means I'm going to pay you interest every year for 10 years and then pay you back the principal. So they have 2-year, 10-year. They're the main ones, the 2-year and 10-year. You got the 30 as well. Now, all that matters here is every single time you see a spike in the 10-year Treasury yield, guess what happens? Crash. So this red stuff here are economic crashes. Every single time we've attacked this trend line, we've had an economic crash. The only time this has not been the case is recently, where we literally just pumped through this resistance And we are, yeah, we're in uncharted territory at the moment in terms of the US 10-year. So does this mean it could go up here, then a crash? I don't know. But when you look at all the other factors, everything is coalescing into 2024 being an absolute cluster mess. So that's the 10-year. And then we have, so if you speak to Jerome Powell, head of the Fed, and any other sort of big economist, the chart that they have their eyes on is the difference between the 10-year and the 2-year. When that starts spiking or gets above the 0 line, game over. So here's the 0% line. So this is the 10-year minus the 2-year. But long story short, every single time this chart gets below 0 and then starts going back up, game over. So we've plummeted way into the red over here. We've now started to come back up. And it's when we start passing this 0 line, that's when everything breaks in the economy. Everything. And these are my projected lines here. So I see the shit hitting the fan when we get into this green circle I've drawn. I don't know when that will happen, but it looks around 2024. So that's an interesting one. And I've just put a chart in here for shits and giggles, and it's this one. The US government is paying $1 trillion a year in interest-only repayments. 1 trillion. For context, they only earn 4 trillion a year. So that's like you having a £2,000 a month gross salary, and you're paying at least 500 quid a month in interest-only repayments. Mind you, I've been in that situation. But if your income is fine, it's fine. But when your income is not there, game over. And so they're the 3 big charts and one for shits and giggles. But there's more. It's like, there's more. Then you can add in a whole bunch of messy charts. So US commercial real estate is primed for an implosion. It's already imploding. If you speak to any billionaire, what are they doing? They're offloading their commercial real estate. Like, always follow what the billionaires do, not what they say. For example, a recent one in the last couple of weeks is that WeWork is now bust. WeWork is the biggest rental or renter in London, isn't it? And now I think 50% of all rentals in London are WeWork or something crazy like that. Well, they're now gone, and WeWork across the world are plummeting. And so now here's the thing: this chart has a distinct lag. There's normally a good 6 to 9 month lag with commercial real estate starting to drop and then shit hitting the fan. So commercial real estate in the US and Canada and the UK is in a piss poor situation at the moment. So even Elon Musk has said that we're just waiting for the clanger to drop. So that's US commercial real estate. You look at European commercial real estate, it actually looks worse on paper. And by the way, the cadence is important. So the past month, so this is US commercial, -3%, past 3 months, -4%. Like, the cadence is not looking good. And European commercial real estate is even worse, yet you don't see this on the news. So bad times. Now you're probably thinking, I'm just a normal everyday person. What does US or European commercial real estate have to do with me? It has everything to do with you, because if big companies go bust, what happens? There is some sort of shit chain, just it will hit you eventually, whether it's in increased living costs, increased lending and borrowing, but normally the prices of stuff goes up and eventually rent and mortgages go up. This is, I find interesting as well, the number of existing homes that are being sold in the US. So not new builds, existing homes, that's dropping quite aggressively. Now it may not look much on the chart, but that cadence is quite telling. And especially when there's an ever-increasing there's new supply of homes coming onto the market at all times. There are always housing estates being built and whatnot, so this is not good. And then when you look at the number of completed house sales in the UK, it's quite dismal really, isn't it? Does anyone think this is going to reverse anytime soon or not? No, I mean, there's always, you know, I know I sound like a doom and gloomer, I'm not. Like, when things are rosy, you'll hear me saying things are amazing, just like in crypto. Crypto is amazing right now. But the wider economy just looks dreadful. And there's all sorts of telltale signs which are pointing towards misery at the moment. And the thing with the markets, everything comes and goes, okay? So let's say I am spot on and there's an economic crash in 2024. What's likely to happen? People lose jobs, companies go bust, there are bailouts, the big boys won't let their big boy buddies go bust. People get bailed out, there'll be way more liquidity sloshing in, pump, 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 and then we go on our merry way. Which is great for crypto, because the more that they pump the currency supply, it boosts our bags. So pump away the Fed, I don't care. So now we need to look at the global network rulers, and this is, I find this interesting. Some of you may have seen this before, but now that things have changed a lot in the, I guess, the 4 years since I last did this presentation, it's interesting. So cheesy slide incoming, and I cringe internally that I've included this, but one of my original quotes in 2017 was this: cryptos are the evolution of money, and DLTs, distributed ledger technologies, are the revolution of trust. And that's so true. Even today, we've seen all sorts of centralized exchanges going bust. We've seen governments confiscating money from other governments. I was chatting at lunch that, you know, if you're a billionaire or business owner anywhere in the world, and you've just seen that the US has basically confiscated $600 million from the Russians, just like that, you're like, whoa, holy shit, I can't keep my money in the banking system anymore. I mean, imagine you're a very nice person, just a normal person running a business, you have staff, but you're Iranian based in Iran right now. You would be shitting yourself, right? Because although you've done nothing wrong, you know the whole world is looking at your country. Or not the world, the US are looking at your country, ready to send Team America over. So, you know, you've got to be like thinking, wait a minute, if my money's in the banking system, I'm at risk here of being frozen along with the government. So crypto is literally that little escape boat. So yeah, I said this in, 7 years ago. God, is it really almost 7 years? It's 2017, when I was a spring chicken. And the secret superpower that crypto has is disintermediation. That is the superpower that crypto really has. Any middleman business can just get booted out of the way. And that's only accelerating now with AI. AI is just literally just getting rid of any superfluous business element. So most of the time, a superfluous business element or superfluous business in a chain is normally the middleman, because that's inefficiencies. If there's any chain of any sort, the market will always gravitate to gross marginal cost. And so if there's a middleman, that means there's inefficiency there. So why go through someone when the quickest route from A to B is the direct line? So what crypto does is just gets rid of that, and AI accelerates that disintermediation. So we've been sort of misled as children. Every single person of power or of all your teachers have basically, we've all been fed the same sort of line and con, in my opinion, that who rules the world? Like, we're taught that the Prime Minister runs the UK and owns the UK, and, you know, but it's not true. Politicians have very little power in the grand scheme of things. Hell, in the UK, we went through what it seems like 10 prime ministers in 2 minutes, yet the country still kept going. And so, in the olden days, like, you go back 100 years ago and before, yes, maybe the government had some power because it used to be a dictatorial, autocratic type affair where, you had, one ruler and that was it. But these days, power moves in the shadows. So as I've explained before, the world is effectively controlled by the policymakers, and those policymakers are the World Economic Forum, the World Bank, and the International Monetary Fund. They come up with all of these policies at Davos and whatnot, and they then get sprinkled down to the enforcers, and the enforcers are governments. And it's no surprise that pretty much every major Western leader is a young World Economic Forum Young Leaders Program. So who has the power today? Who really has the power? Well, it's those that control the networks. And it's not countries and organizations. It's the networks. The world has morphed into a thing where anyone that controls the network where people go to it has power. And we are the end product. So wherever the public's attention and focus and money and time goes, you are no doubt putting that in some sort of network. You are the product. So what are the main world networks out there at the moment? So the biggest network above all is the money network. And the Rothschilds learned that very early on. The Rockefellers, the Vanderbilts, the Rothschilds, the Warburgs in the olden days, they saw this and they thought, right, the Rothschilds even said, I don't care who the ruler is, if you control the money supply, you control the country, or words to that effect. Religion has always been a network as well. It's just a control mechanism. Now, I'm probably going to piss off a lot of people by saying that, but when you really look at it, religion is a control mechanism. It's a hierarchical thing with, Pope at the top and whatnot. So that's one way the masses have been controlled. You then have corporations as we get into the modern day. Roads are a network as well. Historically, they used to be private things to a degree. So who controls the road network? Infrastructure, I'll speed this up now. The energy network as well is, I would say, money and energy are, money, energy and food are the three biggest, most important networks on the planet. You control those, whoever controls those three networks controls everything. And I wouldn't be surprised if those three controllers are the same entity, or friends, best buddies, who knows. Search, so you think, what do you mean by search? Googling. So the world these days searches for stuff on the internet. Who controls the search network? Google, Sergey and Larry. Telecommunications, pharmaceuticals, that network's got big over the last couple of years, hasn't it? I don't know if anyone noticed that Bill Gates has very quietly offloaded a lot of his pharmaceutical stocks. Did anyone notice that? So what Bill Gates did is that in 2018 and 2019, amassed huge positions in pharmaceutical companies, huge, secretly. And then in 2022, he offloaded them all. And as soon as he offloaded them, guess what? The narrative changed on the jabs, didn't they? The narrative completely changed to the point where Justin Trudeau went, I never forced anyone to get the jab. Justin Trudeau and Bill Gates. But there's so many interviews of Bill Gates going, I never forced anyone into getting the jab. And then the videos, all, footage of him saying, you're a mass murderer if you don't get the jab, all that sort of stuff. And yeah, the stock markets are a network. And more importantly, a new network has come to town. Any ideas?
Crypto.
Yeah, crypto, that comes with money. AI. He, she, they who control AI will have their pick. But here's the ironic outcome. It will be an AGI that controls AI. We won't control this network in 10 years. AI will control itself. So power is not between Trump, Putin, or Jinping. You can see how old this slide is. I was talking about Trump, Putin, and Jinping. It's not Trump anymore, is it? It's whoever controls Biden. So yeah, whoever controls the networks that everyone needs, that's really where the power lies. It's within the network controllers. And that's why crypto and distributed ledger technologies, blockchain, are so important, because they're disruptive. They get rid of the middleman. And I was thinking the other day, as I was making these slides, I was like, well, wait a minute. Actually, no, I'll come back to that. Yeah, so money, energy, disintermediation, I've talked about all this. So how do we mitigate the risk of being disintermediated? And it's interesting because one way, that's not the only way, one easy way is that we embrace and propagate decentralized crypto adoption. Owning Bitcoin, even 0.001 of a Bitcoin, is you having personal monetary sovereignty. No one can confiscate your Bitcoin as long as you get it into your own personal wallet. If you buy crypto and leave it on a centralized exchange, you're being an idiot and you're running the gauntlet there. The way you should always imagine crypto is that you've got a big wad of cash, you're going to a Somalian town in the market square and you're buying a whole bunch of diamonds. Everyone has seen you walking in that market square with your big wad of US dollars and now fistful of diamonds. When you leave those diamonds with the person who, so here's the equivalent. You buy those diamonds and go, oh, actually, I'm a bit lazy. I can't be asked to take my diamonds back home and put them in the vault. Can I just leave the diamonds with you that I just bought them from? And they're, yes, of course you can, sir. Yes, I'll look after them very well. You go about your way, and then all of a sudden, the person you bought the diamonds just done a runner, or is dissolved of some sort. Well, that's the same thing as buying crypto from Binance and then just leaving it on Binance, or FTX, as we were chatting over lunch. So it's stupid. Get your wallet, get out of the centralized exchange. And you're also taking away power from the centralized exchange by not leaving stuff there. So here's the cool thing that I think will happen. Crypto will replace centralized networks with markets. Distributed and decentralized networks and markets. And that's so cool. So if you take the energy world at the moment, the energy world is ruled by massive conglomerates. So if in the UK, we've got E.ON, Npower, Octopus, and all that sort of stuff. These are centralized energy firms where they produce energy from a central location, like a big coal power plant or solar or whatever. They then have to transport all of the electricity hundreds of miles, which is highly inefficient. You lose electricity or energy in heat and dissipation. And yeah, you have basically these central nodes that pump electricity to the UK. If you're an alien analysing our energy network, you'd be thinking, these chimps are quite stupid. So what if a nuclear power plant goes boom or just stops working? All of a sudden, the national grid is buggered. So if you're using first principle thinking, what is the most efficient and cheapest way to power a nation? It's to have local energy generation and local distribution. So you have, each village having some sort of power generation, whether, harvestable energy or even, a little bit from the grid, and then you distribute that energy within the village. So, solar panels, etc. That is the cheapest form of energy because the energy doesn't have to go far, and it will be a lot cheaper than drawing from the national grid. So when it comes to energy, eventually what will happen is that we will have this distributed, decentralized energy network, and the energy companies are absolutely buggered. They are. E.ON is already seeing the writing on the wall, and they're already pivoting. They know that these markets will come up and this network will happen. So they're now plowing huge amounts of money into data mining. Because they're now going, wait a minute, what if the UK was completely decentralized, had all these harvestable energy power outputs with batteries and houses and whatnot? How can we make money from that? And that's a huge amount of data. So they've put so much money into AI, data, and analytics. So, yeah. And so we'll have thousands of markets which are transparent, tamper-proof, decentralized, efficient, no middlemen, merit-based, and leaderless. So this is the nuclear bomb of trust and everything within its wake. Money, banking, middlemen, capital raising, network rulers, they're all going to be disintermediated. So, as I said, online networks are gaining real traction and influence. I mean, hell, look at dating. Who owns the dating world at the moment? Tinder. They have a lot of control there. You may not think it, but how much data are we giving to Tinder? A lot. Do you think, oh yeah, they only know my address or my date of birth or whatnot? No. They know a lot more than that. They know your preferences. They know how you talk. They know. Don't you think, let's say I owned Tinder, right? And I was thinking, how else could I monetize my products? And who are my products? The people. Yeah, men, yeah. There is a huge treasure chest of money in the data that Tinder has amassed. And when I say the data, I mean the private messages. So I could take all the private messages in Tinder and all the other data, I could pile that into an LLM, so an AI of some sort, and go, right, find me, what pattern is this? You can bung it all into an AI, and it would treasure, it would data mine that for a lot, yeah. And then you can then sell that. Obviously, they're not going to do that, maybe, but
Or sell them AI girlfriends that are perfectly matched to it.
Exactly, and that's happening. Siri on your phone and Alexa has been crap for the last 10 years, hasn't it? Just wait, give it a year or two. Alexa and Siri are going to be just insane. It will be your best friend. You all want to marry Siri.
I think it's someone in the US that...
Yeah. So here's the thing, what's more important to you? Money or emails? So back in the 90s and the early 2000s, we had this explosion of the internet, and everyone's like, oh my God, this is amazing. We can now transfer information at light speed for very little money. And the internet has completely revolutionized the world. But obviously money is more important to you than emails, isn't it? Crypto is exactly the same as the internet. We've got this big explosion that we're seeing, but not only can we transmit information, but we can now transmit value as in money and information at the same time. So if you look at the growth of and where the internet's gone over the last 20 years, crypto is going to be a lot bigger than the internet was. And crypto is now basically leapfrogging on top of the shoulders of that the internet has created. So I could bore you with all of this stuff. You've seen all of this before, why crypto is amazing, yada, yada, yada. But network value is the reason that the more nodes on a network, the more valuable that network gets. So that is what Bitcoin actually looks like, by the way. That is Bitcoin, if you were to visualize it. Oh, it's actually probably a lot bigger now because this slide is from 2021. And so when you talk about network value and money and stuff, there's all sorts of silly debates, because back in, this was from 2018, the big debate back then was, Bitcoin against Bitcoin Cash and all the different scaling issues. And it was silly. It was completely silly because they were arguing about, which is the better, what is the best form of horse for this horse and carriage, when in fact the question should be is, wait a minute, a horse and carriage is an inefficient way to go from A to B. What we need to do is, screw that, think of something that can get us from A to B, fastest, cheapest, etc. And this is the slide I made in 2018. I was like, this is the minimum prerequisite for a crypto. Instant transactions, zero transaction fees, unlimited scalability, effortless cross-chain interoperability, micro-tractions enabled, smart contracts enabled, no choke points. Well, I think we can all think of a coin that matches a lot of them. I'm not going to say that. I don't think of that. Out. So again, this is from 2018. I said, this is what a centralized network looks like. That's what a decentralized network looks like. And by the way, that's what I think the energy grid will look like. This could be Norwich and the surrounding villages and whatever. But decentralized and distributed, that's the answer for most things. So when we talk about a distributed grid, all sorts of magic can happen, and that magic could be voting, markets, crypto, energy data, and more important, computing. And that is my little tidbit. This is part one of this part of the presentation. Later this afternoon, I'm going to continue from this point here, because decentralized, distributed supercomputing is a giant that no one's talking about at the moment.